Hello and welcome to another acysecurities market update, the lockdown edition. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, as always, I have a bit of a virus update for you. We've now seen the infection rates climb above 500,000 and death rates are surely above 20,000 now as well. We're seeing that the US has actually had a dramatic increase with nearly 80,000 infections based there, setting the chain to be able to take over from what Wuhan and China had in terms of infection rates as well. They're only sitting about 1,000 infections behind. We're likely to see that rise over the weekend, definitely. Now, moving on from that, we have had a bit of other news coming out. Now, overnight, we saw that we had US jobless figures coming out and the claims that go towards unemployment benefits. Now, these are a weekly thing. Usually we see the big results coming out during non-farm payroll at the end of the start of each month. Now, what we're seeing here is that we've had a massive rise. Now, in fact, this has dwarfed the largest on record since 1967 for unemployment claims in one day. Now, it's moved from the average of about 200,000, which is setting at all-time lows, to now 3.28 million new claims just in the past week alone. Now, that is a massive indicator of recession. We're seeing that in the past, that when recession occurs, it sort of just gradually echoes in, but this time we've seen it just multiply dramatically, and it is likely to see these figures continue to occur for the next couple of weeks at the very minimum, until we sort of see realized losses occurring and we start seeing numbers for businesses coming out as to how many people they've actually let go because of the economic situation in the US. Now, to sort of put this in a little bit more perspective and to show you the effect on the US dollar, I put up 3 different charts. So the first chart that you're looking at now is of the dollar CAD. And I have marked on each of these charts where those US claim figures have come out. Most of them have only really had about a 100 pip movement, but I just wanted to sort of iterate the idea that we're seeing a weakening of the US dollar. So the next chart we have is the pound dollar, and on the pound dollar again we can see where it's moved out and where price is moving the opposite way. And the final one is for the dollar yen. Now, interestingly enough, the S&P 500 has actually risen in value, and we're looking at more of the fact that as opposed to the rest of the stuff, which is a comparison between other economies being, we're looking at the UK or the Japanese economy and the Canadian dollar. In this instance, it's really just internally based. So that's why we're seeing a little bit of a difference between when we see a weakening in the US dollar. Now, what I'm seeing here and what I believe to be the case as to what's going on is really about the idea of this bailout that's going to be coming. The quantitative easing of $2 trillion, potentially more in the coming months. But we're seeing here that might be showing a little bit of optimism towards investors, especially those looking at US stocks and, of course, the S&P 500. Now, from here we've had further reports coming out from China, and this is to do with their manufacturing. Now, whilst their economy is looking at the idea of starting to regrow that business and is starting to build back up, we're seeing that they're actually having reduced outputs. And the reason for this is actually coming from people are not making orders to buy things from China at the moment. Their largest competitor, or where they get most of their products sent over to, is Europe. And so 30% of their products are really down because those order numbers are down. And we're seeing that there's really now become a second wave of a virus hit, if you will, on China. So we're going to have to keep an eye on what's going on there. I imagine that we will be seeing a move between most countries to move towards wanting to have their own manufacturing, considering the fallout that's really occurred from us being, most of the world being so reliant on China for their manufacturing of cheap goods. Now, looking ahead at the news, we do have a couple of things coming out tonight. Most of them are low impact. However, I've put on the chart here, you'll be able to see it on your screen in just a moment, of what I am anticipating to see coming forward tonight and whether they are going to be high impact or not. Now, considering that we've just had the US jobless claims, I believe that we're going to be seeing a little bit of more action around low impact events relating to the US. On this instance here, we have it for inflation expectations and consumer sentiment. They are going to be the 2 bigger ones to keep an eye on. Obviously, US inflation is going to be interesting to see over the next coming months, and consumer sentiment is probably going to be the core one to look at tonight, purely because we are having so many people losing their jobs. So I imagine their economic circumstances and their interest in what's going to be moving ahead is likely to be down. So From there, you've also got a tentative announcement from the Bank of England. That's tentative because we don't know the scheduled release time. It could be at any time throughout today or even the early hours of Saturday morning. So keep an eye on that, especially if you're trading the pound dollar.